Good morning, everybody. Hopefully you had a wonderful fall weekend. How about last week's 5Q tape breakdown? How did he do on the DocuBank conversation? So, guys, I've got some of my top guys that swear that DocuBank is one of their biggest hooks to get new clients, at least for people, the biggest hooks to get people to go through the 21-point checklist process. So if you're not getting that kind of experience with the people you're meeting, the DocuBank just seems like oh yeah, that's a good idea, whatever, just kind of a low interest level with that. Please go and walk back last week and find that 5Q tape breakdown. And if you don't know how to, you can't find it, just give Trisha an email and she'll get you that out to you again, okay? Coolio. So exclusive long. Many of you will love this article, and hopefully you've seen it. But long Jim Cramer ETF shutting down. Jim's stock picks have been suspect to say the least. So what happened? First announced October 2022, Tuttle Capital launched two Cramer-themed ETFs. One offering investors a way to profit from his stock recommendations. The other bet against his stocks. On Monday, it was announced that the long Cramer Tracker ETF will be shutting down. The other ETF, Inversed, which is betting against Cramer, will remain open. So what does that tell you? Well, so we all know that Jim's stock picks have been suspect to say the least. Tuttle Capital Management CEO said, we only wanted to do the SJIM, but decided to do the LJIM to be nice and perhaps engage a rational dialogue about his picks. So, yeah, Cramer's a genius, right, Bert? So Jim Cramer's stock pick sucks. Here's how you can check for yourself. I don't know if we put this, we probably want to go ahead and source this on the coaching call, Missy, so people can access this.
They can click directly.
Okay, cool. Awesome. Because, guys, if you ever have somebody who wants to do their own stock picks, they mentioned Jim Cramer, this is an awesome step-by-step procedure to take those people through to find out, oh, I guess Jim Cramer is a complete blithering idiot. So, like you said, what Dale said, yeah, he can yell. That's all he does. He yells and gets excited, but his picks suck. This predictive indicator has never been wrong and has just provided Wall Street with a sobering outlook. Under certain parameters, one leading economic indicator has accurately predicted U.S. recessions for more than 6 decades. An assortment of money-based metrics use U.S. economic weakness as likely, but bodes poorly for the short term of the Dow Jones Industrials, S&P, and the NASDAQ. So, guys, probably for a year, even while the market has been going up, I've been showing you all these indicators saying that, sure, the market's going up, but it's a very, very narrow band of stocks going up. And second of all, that there's all sorts of red indicators. And do I ever show you the same indicator, or is it a constantly different indicator that I'm showing you? And if I showed you the same one indicator out of 40 indicators saying, look, this one indicator is wrong, this one indicator is saying it's bad, no, I'm showing you different ones constantly. So here's yet another indicator saying, beware of the market. Truth be told, there's no such thing as a surefire economic data point. Yeah, I get it. There is no, just because this thing's been 100% accurate, does that mean it's going to be accurate enough going forward? No, it does not. But it's one of 95% of indicators saying the market is is not a safe place to be right now. So surefire economic data point or predictive indicator can always, with 100% accuracy, alert investors as to the directional movements of the Dow, S&P 500, and NASDAQ. Nevertheless, there are data points and predictive tools that have exceptional track records when it comes to correctly forecasting directional for the U.S. economy and stock market. One of those tools hasn't been wrong in 64 years and provided Wall Street with a sobering outlook this past week. This index offers, and this is actually 3 weeks old, this index offers an ominous outlook for the Dow Jones, S&P, and NASDAQ. Every month, the Conference Board, a nonpartisan think tank focused on providing economic insights, releases data on a handful of proprietary indexes. Arguably, the most well-known of those is the Conference Boarding Leading Economic Index. So, guys, have I ever talked about this one before? Whose growth rate is measured on a rolling 6-month basis. The LEI is comprised of 10 inputs. These 3 of these inputs are financial components, such as interest rate spread between 10-year Treasury bonds and the federal funds rate. The remaining 7 components are non-financial, such as average consumer expectations for business, average weekly initial unemployment, insurance claims, private house building permits, to name a few. The purpose of the LEI is to use these 10 inputs to signal turning points in the business cycle. Approximately 7 months in advance, While the 7-month lead time hasn't always been spot on, the LEI certainly has. So it's not always exactly 7 months. This is 100% accuracy for the last 62 years. The average turning of the economy is 7 months. So the time, whether it's 6 months, 7 months, 8 months, 9 months, or 5 months, that's different, but it's been 100% accurate. When back tested in 1959, there have been numerous instances where the year-over-year growth in the LEI has been turned modestly negative. By modest, I'm talking about a year-over-year decline ranging from 0.1% to 3.9%. However, year-over-year declines of 4% have represented the proverbial line in the sand where the U.S. economy is always, eventually, again, an average of 7 months, eventually falls into a recession. This past Thursday, so it's about a month ago, August 17th, the Conference Board releases July data. The LEI declined to a 0.4 on a month-to-month basis, which marked the 16th consecutive month of declines. It's the longest period of consecutive declines in the LEI since the Great Recession. Most importantly, the year-over-year drop in the LEI is more than double the aforementioned arbitrary decline level of 4%, which is where the index has 100% accuracy predicted U.S. recessions for more than 6 decades. So you can see where we're at. We're in danger territory. So this could very well be a self-proclaiming prophecy. This is going to happen because when the people are saying the economy is going to turn, people get more conservative. Now, I just read that 63% of people are foregoing entertainment, eating out, and buying cheaper groceries. 63% of people are foregoing entertainment, vacations, eating out, etc., in plans of having enough money to spend for Christmas, for the holidays. So does that sound also does that first of all sound like people who are really, the public as a whole is really go about the economy? If there's underspending right now so that they'll have money for the holidays. Also, where is credit card debt right now? Where's credit card debt right now? Record territory. Where is defaults on auto loans? Record territory. Now think about this, guys. It's not you, it's not me that have a high credit card debt. It's not you or I that are defaulting on our car loans. It's not you or I who are spending less now so we can spend more at Christmas. But are we in the bottom 25 percentile or are we in the top 25 percentile when it comes to income and net worth? I hope you're in the top 25%. So think, these people, what drives the economy? What drives the economy? The top 25% or the bottom 75%? What drives the economy? The top 25% or the bottom 75%? Yeah, just by the fact that does the bottom 75% have to buy groceries? Do they have to buy gas? Do they have to pay rent? Do they have to pay? Do they have to? There are certain things. Now, people in the top 25%, they're buying luxury items. But other than the luxury items, we all have certain things that we need to buy. So it's the bottom 75% that drives the economy, and those are the people that have maxed out their credit cards. They're saying, "Oh my God, I better cut back now because we won't have enough for Christmas." That are defaulting on their car loans. What does that say for the economy? Sure, I'm doing great. I think this is awesome. This is awesome. I'm doing great. You're doing great. But this, Jeff Bezos is doing great. The doctor next door is doing great. But the neighborhood you live in is not the 75%. The neighborhood that that you live in is in the top 25%. So everybody there is doing great. Those people are not the ones that are driving the economy. That's what we have to worry about. Historically speaking, about 2/3 of the S&P 500 drawdowns occur after. So 2/3 of the S&P 500 downturns occur after, not prior to a U.S. recession being declared. In other words, it signals 2023's monster rally may be nothing more than a sizable bear market bounce. And again, was that rally broad or was it very, very narrow? Were most stocks going up or was it a very narrow band of stocks going up? Come on, you guys, you should know this. Wide W? Oh yeah, narrow. That's right, narrow. So again, I have not pulled money out of the market. I sit at a 50-50. So I haven't put money out of the market. I'm leaving that because I can't predict the market. But am I putting any more money into the market? If I had a windfall now, if I was overweighted at 75% market and 25% guaranteed, what would I do? I'd move the market to get more to a 50-50. So guys, I believe that I know more than the average Joe out there when it comes to the stock market. So I'm not a genius. I'm not on Wall Street making predictions for Charles Schwab, but I do know as much or more than most financial advisors when it comes to the market. And I still say it a 50-50. Why? Because I don't know. I know that I don't know. And if I know that I don't know, I do what with my bets? If I know that I don't know, yeah, CYA, that's right. What do I do with my bets? I hedge them. And will I be hurt? Because guess where my 50% of money is? I got the market. 50% of the money is in the market. Where's my 50% of guaranteed? Where's my 50% of guaranteed? It's in FIAs. So will I be hurt if the market goes up? Will I be hurt if the market goes up? No. Half of it's going to go up fantastic because I'm all in indexes. Half of it's going to go up pretty darn well because I'm in FIAs. If the market does crash, at least 50% of my money is not going to be hurt at all. So please, please, please make sure your clients are not, because right now, when we all know this, when the market has had a huge increase like it has over the last 12 months, is that the time to get in? No. But what does everybody want to do when the market goes up like that? When the market goes up like that, so people want to buy at the right time or the wrong time. Nobody wants to buy when the market has fallen, but everybody wants to buy when the market goes up. It's the very wrong time. When you've seen those diagrams of roller coasters, right? Market up, market down, market up, market down. Where's the biggest influx into the market? When the market's down or the market's up? When the market's down or the market's up? Where's the biggest influx for the general population? Yeah, when the market's up. And when the market's down, when do people pull out most of the money out of stocks? When the market's up or when the market's down? They pull out when it's down. That's why they need advisors, because it's difficult. Having money is emotional. Very smart people do stupid things. They're smart with everything in life. They're smart when it comes to raising children. They're smart when it comes to math. They're smart when it comes to their job. They're smart when it comes to sports. But when it comes to money, guess what? Idiots, because it's emotional. So they've hired you as advisors to do what? Help them take the emotion out, sitting on the sideline and say, let's take our emotions out of this and let's think rationally. It's your job to help them think rationally. If you're thinking rationally right now, should you have more than 50% of your money in the market? Especially when the stuff that you have out of the market is in the FIA. And we'll do just fine if the market goes up. No, you should not. Make sense? So today's actual topic is 5 advanced selling skills and techniques to nail them. So you all know that I love HubSpot. HubSpot has excellent marketing, excellent sales material. So they did one on 5 advanced selling skills and the techniques to nail them. So let's walk through them. Exceptional salespeople don't separate themselves from the pack by doing what everyone else is doing and hoping for the best. Guys, do we subscribe to that mentality? Do we do what everybody else is doing? Or do we do something completely different from what all our competitors are doing? Same or different? A little different or a lot different? Do we use predictive financial planning software? Predicting what interest rates are going to do, what inflation is going to do, what market returns are going to do? Do we do any of that? What do all your competitors do? Do your competitors use that kind of software? That's the only kind of software they use. Do we tell our clients that we've got a money manager who's got it all figured out, who is going to get you out of the market in the bad times before the bad times hit, get you in the market before the good times hit? Do we do that? No. Do we spend a big chunk of our time talking about non-financial? So these are all things that other people do not do. That's a good thing, right? How many of you, let's see, give me a why or no. Yes, you've heard this before. No, you haven't. where a client said, and they've mentioned something, all that stuff that you did with my beneficiaries and with the property casualty and with identity, I've never had an advisor do that. The reason I went with you is because you seem more like a consultant than a salesperson. How many of you have heard something like that before, where the new client referred to the non-financial stuff as why they came on? So I got 2 whys. Come on, guys. Only 3 of you. 4. Come on, everybody. Because if you've not heard that before, you know what I know you're not doing? The 21-point checklist. Because we've got 60,000 tapes that we have archived. We have way more than that over the last 23 years that don't have archived, and that's the reason people give. They don't say, boy, you're a really smart advisor, you have good investments, that's why I'm moving to you. No, they say you're different from all of my other people. Yeah, when it's done right, Mark. The best reps demonstrate advanced sales skills, ones that can help frame you as an authoritative, helpful, and empathetic guide with expertise relevant to your prospect circumstances. Here we'll review some of these skills and go over the techniques you need to demonstrate them. So we want them to be very high on these skills. Number 1, being helpful without being too friendly. Do I recommend that you are friendly at the first meeting and find out and coke and joke with them and find some area that you can bond with them at the first meeting? Do I recommend that? No. Business-like, that's right. Polite, we're friendly, we're polite, but we're there to get information. Because when you go to buy a car and that guy's overly friendly to you, does that make you want to buy the car more or buy the car less from him? Less, that's right. So we want to be helpful, but not too friendly. We're not here to make a friend with them right now, because they know the only reason that you want to be a friend with them is why? To get their money. You're there to walk them through the process of understanding their pain points, seeing the value of your product or service, and ultimately finding where those 2 elements intersect. That comes from an advisory perspective, not an overly friendly or confrontational one. I don't want to be confrontational either, but we want to be what? We're there. That first meetings, we're there to gather information. We're not there to become their friends. Number 2, conveying value very specific to your prospect. This point ties into the one above. You can't take an advisory role if you have no idea who you're advising. Exceptional salespeople don't sell on general sentiments and generic bells and whistles pitches. Guys, do I ever recommend that you go after people who are not retired? When you come to me and say, I want to go after business owners, what do I say? Find another system. I want to go after highly paid professionals. Go find another system. Why do I only want you, if you're going to be using our system here, 21-point checklist, I only want you to work with what? Retirees, because the 21-point checklist applies to how many retirees? Does the 20-point checklist apply to poor retirees? Yes, they need those non-financial things done. I don't recommend you going find them. Does it apply to middle income? Yes. Does it apply to the high net worth? Yes. The 21-point checklist applies to all retirees because it's skewed right to what is important to them. Number 3, teasing out pain points your prospective prospect might not have even considered. So please, somebody tell me, what pain point do we tease out that the prospect has not even considered? Please, 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 everybody needs to answer this. That's right. Motive, their advisor is screwing them. Their guy is taking advantage of them. If they thought that, would they still be with their guy? No. They have no clue. When they wake up in the morning, before we do a 21-point checklist, and they wake up in the morning, do they love their guy? Before coming into your 21-point checklist, when they wake up that morning, do they love their current advisor? Yes. Or they would have done what? A long time ago. Left him. So the only reason they're coming to see you is to see if you got any ideas they can do what with? Move their money to you with, or take it back to their current guy? They're looking for ideas, because 9 times out of 10, if you don't get to the point where they think their guy is screwing them, they're going to take that money or take those ideas back to their guy. Why? Do people like confrontation? Do any of the people, again, 99% of people, do they like confrontation? No. And is leaving their current guy confrontational? Yes. Even if the guy's nice about it, they have to tell that guy, I know I've been working with you for 10 years, but I no longer want to work with you because I think this guy's doing better. That's confrontational, even if the other guy's nice. And we know most of the time the other advisor's not nice. So they don't want confrontation. Do they like hassles? No. And is moving their money a hassle to them? I mean, you've moved people's monies before, and does it happen instantaneously, or does it take a week or two or a month? And they're wondering, where's my money? I started working with you, and now I don't even know where my money is. They don't want that. They have to learn to read new statements. They have to learn how to interact with you differently than they interact with their current guy. So it's full of they don't want to move because it's confrontational and it's full of hassle. So you have to figure out, how can we get them to move regardless of the hassle, regardless of the confrontation? And that is for them to discover, my guy, the guy who pretended like he really cared about me, has been taking advantage of me, which I'd be okay with if we both won. But he's winning and I'm losing. That's not good, right? That's what we have to get. So that's the pain point we have to get to. Because is paying too much taxes a pain point? Yes, it is. Will they move if you've got a better tax idea? No, they won't. They'll take that idea back to the current guy and say, can you do it? Of course, he's going to say yes. Will they move? I mean, paying way too much in fees. That's a pain point. Will they move if they're paying too much in fees? No. They'll go back to the guy and say, you're charging me too much in fees. And what will their guy say? Oh, you're right. Let's take a look at this. Let's figure out what we're going to do, and we'll get those fees lowered. Guys, the only thing that's going to get them leave is that they no longer trust their guy. So yes, we do. So far, out of the three things they said, the three skills, how are we doing with the 5Q system? 3 out of 3. The best practice salespeople go beyond that. They know how to unearth very real issues the prospect hasn't even thought about. Do we do that? Yes. Being able to identify unconsidered issues, bring them to light, and thoughtfully address them in a single conversation is one trickier and most advanced sales skills the salesman can have in their repertoire. Do we give you this with the 21-point checklist and the scripts? Do we give this to you with the 21-point checklist and the scripts? Yes. So and the reason I like that is because if they pay too much in taxes, if they think they're paying too much taxes, how quickly do they forget that? You point out they're paying too much. You point out they're paying $6,000 in taxes they don't need to pay. 5 minutes, right, Bert? Because for the last 10 years, did that affect them? The fact that they're paying $6,000 too much in taxes, has it affected their lifestyle? No, they were still doing yeah, exactly. That's right, Andre. They're still doing the stuff that they wanted to do. So yes, it's irritating, but once they leave the office, they're back to normal life. How about fees? How long before they forget the fees? Again, they think, well, yeah, no, that fees, that's crazy. But you know what? We'll talk to them about that. And essentially, it really hasn't affected us because, we're paying him to make us money, and he's made money. And yeah, maybe we're paying too much, but it really hasn't affected whether we want a vacation or not, or what car we got. So no, I guess it's not that big. See, any thing that we show them, they'll discount. There's one thing they will not discount. There's one thing that's like a burning fire in their brain, that they will not be able to sleep, that they will not be able to go on vacation. They'll not be able to do anything until they get this money moved. What is it? He's taking advantage of me. We talked about this before. If I'm going to go to the theater, I'm going to go to a movie, and I come up to a stoplight. Okay, well, it's red, and I stop. And then I'm listening to the radio, and I'm waiting for the stoplight to go from red to green. It probably takes about 60 seconds, 90 seconds, 2 minutes at the most, and boom. Then the light turns green, and I go to the movie theater. Do I get angry at the stoplight? Do I pull out my gun and shoot the stoplight? No. What do? I just there's a stoplight. Duh. I deal with this every single day, so why worry about it? It's just a machine that tells me when I can go. It keeps me safe. Now I get to the movie, and there's a long line for this movie. So I get in line, and then I see, and there's no reserved seats at this theater. There's no reserved seats, so I get in line thinking, no, I hope I get a seat. I hope I get a seat. And then I see this 2 guys butt in front of me. Now, When they butt in front of me, how much time is that really going to cost me? When they butt in front of me, how much time is that really going to cost me? Yeah. 60 seconds, 90 seconds, 2 minutes at the most. They're going to go up before me, get their tickets. That's what, 60, 90, 2 minutes. The same as the stoplight. But what do I do now? What happens to my brain now? I get pissed off. Why? Those people think they're better than me. Those people think their time is more valuable than me. Those people think they shouldn't wait, but I should wait. Those people are what? Jerks. Now, dude, I have the same reaction. It's the same time, the same problem, which is a delay of 60, 90, 2 minutes, a delay of that minimum amount of time, but I had a different reaction. So if all you show them is the fact that, oh, you're paying too much in taxes. Oh, I can show you how to reduce your taxes. You're paying too much in fees. I can show you how to reduce your fees. You're doing this, that. If all you do is show them, you're taking too much risk, but I'll show you how to take less risk. If all you do is show them that, they think, yeah, maybe I should do those things when it makes sense to do them. I'll keep that in mind. Let me think about it. But when you show them that they've been disrespected, what happens to that? Is that an emotional or a non-emotional event? When you show them that their guy has been withholding information so that he put more money into his pocket, which is actually taking money out of their pocket. See, if it was a win-win, they're cool with that. Okay, he makes money, yeah, but I'm making money, so what's the deal? But if he's making money and that's making me less money, I'm pissed. Will they wait till they get back from vacation if you do that? I mean, I can tell you how many tapes we have where people are making appointments that while they're in Mexico, they're going to get on the phone and move those monies. While they're on vacation, they're making appointments. So on vacation, while they're on vacation, get those monies moved. Because if you don't, what's your whole? If you guys think a guy is screwing you, what are you going to be thinking about all vacation? That guy. So that's the thing. That's the pain point that we utilize. Relaying industry-specific knowledge. Trust is recurring theme that is placed in every point on this list. Exceptional salespeople know how to quickly and convincingly develop it with prospects. A lot of time, trust is a byproduct of specificity. Are we specific in what we show people? How specific are we in what we show people? How much data do we use in showing people? Yeah, we're very specific. Prospects want a specific value proposition that applies specific actions to suit their specific pain points. Our whole system is about specificity. One way to nail that element is by conveying extensive knowledge of the industry and a correspondence with them. Have they ever seen manager tenure before? Have they ever seen a risk-reward scatter plot before? Have they ever seen a correlation table before? Have they ever seen exactly how much they were paying in expenses? Have they ever seen these things before? No. So we're helping them be very specific in what they want. That's what every single thing that we do here is very, very specific. Our USPs, how specific are USPs? 25% or more and lower chance for unemployment without moving a single investment. How specific is that? Reduce the tax you pay in your IRA and retirement account to withdrawals by up to 70%. How specific is that? Reduce the tax you pay on your investment income. That's the income you get from investments, not your retirement accounts, down to just the 1% tax bracket instead of the 15, 25% or more that you're paying now. How specific is that? Have you applied for the program that pays for 2 years of long-term care costs without having to pay expensive annual premiums? How specific is that? Have you applied for the program that will protect a wife from losing half her Social Security income at a spouse's death? How specific are these things? How specific are these things? They're extremely specific. So maintaining a contrarian mindset. Maintaining a contrarian mindset rests on your ability to find gaps and hiccups in your prospect's operations. It's a matter of staying skeptical, scrutinizing, and being mindful of faulty logic, overlooked opportunities, and suboptimal execution. Exceptional sales reps with this mindset look for places where the customer might have gotten it wrong. What's the whole 21-point checklist about, guys? Now, we differ here. It's not that the customer got it wrong. They got 21 things that they're doing wrong, but whose fault is it? The customers or their advisors? Their advisors, right. Did they overlook an opportunity for savings? Do they leverage any process to deliver subpar results? Are certain components of the stacked, redundant, or inefficient. This is for selling. This is not just for financial advisors. HubSpot is about professional salespeople, people who sell in industry, big ticket items, whether it be a John Deere tractor fleet to a city or whatever. You can see they're talking here, or selling IBM selling a huge, their services to a huge company. So this is about that. But you see how that even though these are too industry specific, they still apply to what we do. Even though they're maybe to other types of industries, they still apply to what we do, right? Salespeople with a mindset can turn these hiccups into viable ins and give them a basis for an effective value proposition. From there, they can offer alternative perspective to raise questions, answer unique questions, opposed to conforming already established ones. So do you see that 5 things that top-notch salespeople, people who make more than $1 million a year, how many of those 5 does the 21-point checklist give you? Got one answer. How many of the 5? 3 out of 5? 1 out of 5? 5 out of 5? Yeah, it gives you all of these things. All of these things, all of these things. Make sense? So next thing I want to do is we have made it to, congratulations on making it through the whole 21-point checklist. Now we're going to talk about ending the disclosure meeting and look at how we do that. So let's bring that up. But just a second here. We bring that up. So at the end, what do? We then start going in the reverse order. We go long-term care, diversification, risk reward, manager tenure, investment, interest rate, turnover, fees, beneficial. We go right back the reverse direction to make sure they're what? Angry with their current advisor about all those things. So let me bring up here. Person, but we're just going to assume there's 2 people here and with his wife, but I'm not going to go back and forth with a pretend wife. So when you're meeting somebody, you have to make sure you're talking both to the husband and the wife.
Oh, we're not diversified.
And we're not diversified because what?
Instead of things instead of one.
Yeah, and is that complex or does it seem more complex?
Yeah.
So who might you need then?
Well, then we might think we need him.
Because if you only had one thing to watch, would you need him?
No.
So why do you have 11? If they're all acting the same, why do you have 11 things instead of one thing?
So we can make more sales and make us think we need him.
Yeah. So the last thing we want to talk about, we've been at it a long time, is long-term care. Can we just put that a pin in that? Because virtually all the changes we would make would affect your long-term care. So could we put a put on that and talk about that later?
Sure.
Okay. So do you have a clearer picture of where you are than when we first started?
Oh, definitely.
Yeah. So what did we find out about diversification?
Well, we're not diversified.
And we're not diversified because what?
He wants to make more sales.
He wants to make more sales. Yeah. And we found out when it came to return, we're getting the highest return for the least amount of money, or the low returns for more money?
We're getting low returns for high fees.
So you're paying more to get what you want, or the opposite of what you want?
The opposite.
And when we looked at your tenure, we found that you are getting the highest experienced people for the least amount of money, or the least experienced people for the most amount of money?
Least experienced for the most.
And why?
Because he just wants to sell whatever he's got to sell.
Yeah. And again, do you minded him making money?
No, but not at our expense.
Right, because if he's charging you and you're getting the best, is that good?
Yeah.
But he's charging you and you're getting what?
The worst.
Yeah. So that was me using example of the devil's advocate, which is what? Yeah, man, you don't care if he's making money. If you're making money, is that what's happening here? And making him argue, well, no, but that's not what's happening. So, see, that's an example of using the devil's advocate, making him explain to himself. I mean, I'm throwing it out there, but making him say, well, no, that's not right. He should be. See, he's explaining to himself and arguing the point to himself that, no, that guy is screwing me. And then when we look at your investment weighting, your balance, we found out you were balanced or not balanced?
Not balanced.
And why did that happen?
Well, he just wanted to make more sales.
Because you could have saved how much?
About 40%.
To be more balanced or less balanced?
To be more balanced.
Yeah, and you got it on the head. He wanted to what?
He wanted to make more money.
Wanted to make more money. And we found out your bonds were safe or not safe?
They're not safe.
So we found out that they have maturity or no maturity?
Oh, no maturity.
That they are inflation.
So what kind of bonds does this client have? If I say it had no maturity, what kind of bonds does this client have? Very good, Bert. Bert's got it. John's got it. Nick's got it. Yeah, mutual funds. How many people own, percentage-wise, how many more people own bonds in some sort of fund versus individual bonds? Yeah, most. Exactly right. That's why we find out that if a bond fund has no maturity, that raises the risk or lowers the risk. Well, bond funds don't, or any type of bond fund does not have maturity. So individual bonds have maturity. So at least if you hold them, at some point in the future, maybe 25 years, you get your principal back. Will that ever happen with a mutual fund? No.
Inflation protected or not inflation protected?
They're not inflation protected.
They have government guarantees or no government guarantees?
No government guarantee.
So instead of being something that has maturity protection, inflation protection, government guarantee that you could get for how much money? How much?
Zero.
You're instead are in things that are what?
Well, they're risky and they're expensive.
And why did that happen?
He's making more money.
Mm-hmm.
So how many times now on this closing this meeting am I making him tell me the motive for all the bad advice he's gotten? So far, how many times? 5 times so far. I'm making sure. Yeah, by the end, Bert, you're right. It's going to be 20. But right now I'm at 5. So
we looked at your turnover costs, high or low turnover?
Oh, we had high turnover.
High fees or low fees?
We had high fees.
So you're getting more of what you want or not what you want?
Not what we want.
Paying more or less for it?
No, we're paying more.
So you're paying more for the opposite of what you truly wanted. And why does that happen?
Now, guys, why am I going backwards through this? We've been at this for an hour and a half to 2 hours. What do people remember? When you've been at something for an hour and a half to 2 hours, what do people remember? The first part, the middle part, all of it, or the last part? The last, that's right. And we want them to remember just the last part, or we want them to remember all of it? All of it. All of it. We have to do this recap.
Well, again, he's just trying to make sales.
Just trying to make sales. We looked at that, the other fees. Paying more fees for what?
No, for insurance we don't even want.
Yeah. Beneficiaries, right or wrong?
They're wrong.
And why were they wrong?
Well, he doesn't care about them.
We find out the titling is right or wrong.
Wrong.
Why does that happen? Why we use the wrong form there?
He wants to hold the money longer to make more.
Yeah. And then we found out we need to talk to a property casualty agent. We need to get our quality of life director, medical. We found all these things. So do you have a clearer picture now of where you are than when we first started the couple?
So we've really now had them remember, there's not just one thing wrong. It's not just the risk, it's not correlation. It's a whole bunch of things wrong. Now go listen to that. I always end meetings this way. So I want to back up just a few seconds here and listen to how I ended up here.
We need to talk to a property casualty agent. We need to get our quality of life director, medical. We found all these things. So do you have a clearer picture now of where you are than when we first started a couple hours ago?
Oh yeah, for sure.
Is there any things that you see in this house inspection report? Did we find some things under the surface?
Oh yeah.
Things that could hurt or not hurt you?
No, that they could hurt.
So are there any changes that need to be made?
And again, guys, how many statements have I made? In fact, through the whole hour and a half, 2 hour meeting, how many statements do I make? None. So Jeff has just explained to himself for an hour and a half, and now he's summarizing to himself why he needs to move the money, or 2 hours, why he needs to move the money, why he cannot trust that guy anymore. Because do I tell him that the guy is screwing them? Do I tell him that they're paying too much in fees? Do I tell them anything? Have I told him a single thing in the last 2 hours? Have I told him a single thing? No. Now, prior to coming into 5Q and all of your other competitors, what do they do for their hour and a half when they're trying to sell a client or get a client to move? What do? They spend the whole hour and a half doing what? Tell, sell, preaching, and teaching. That's right. Telling, selling, preaching, and teaching. That's not the way to get a sale.
Oh yeah, we need to make some changes.
So, I mean, I've watched you through this report. I guess the question I would have for you is, do you want me hands-on with fixing some of these things? Do you want some help with these things that I can help you with? Or is this more of an academic exercise for you at this point?
No, we want some help with these things.
So why did I just do that? I made him tell me what? Get permission to go along with that. Yes, Bert. So who's inviting who in? I said, is this more of an academic exercise? Or do you want my help? No, I want your help. I'm getting invited in. See, because when they invite you in, see, if I force my way into a party, how easy is it for the host to kick me out? If I force my way into a party, to show up, hey, you know what? Hey, I'm a good guy. I'm having fun here. I'm the life party. How easy is it for the host to kick me out? Easy. But if I'm invited into the party, does that become harder to kick me out? If they invited me in, is it harder to kick me out? Yes, it's much harder to kick you out. I need them to invite me in.
Okay. So can I make a suggestion?
Mm-hmm.
We cover a lot of things today, or not very many?
Oh, we covered a lot.
A lot. So,
okay, listen to this hard close now. Listen to how I'm going to close it. I'm going to lock this door. I'm going to close this door so hard they're never going to be able to get out, and they're going to have to move their money to me. Listen to this hard close.
let's do this. Let's go out to the front desk. We'll make an appointment for about a week out. Give time for the dust to settle. Give time for you to come up with some good questions for me, and then we'll move forward at your pace. How does that sound?
No, that sounds great.
Okay, so let's do that.
Okay.
Was that a hard close, guys? No. See, I can't close the door. I don't like asking people for their money. I don't like asking people for a decision. Instead, I want them to ask me. I want them to say, can we move our money to you? Will you help us? Will you take care of our money? Will you take care of our situation? Will you become our advisor? I want that. I don't say, hey, would you like me to help you with your money then? Would you like to move your money to me? See, if they instead say yes, or if they say yes, can they change their mind? Because are they confrontational? No. So they'll say yes, and then what do they do as soon as they go home? Hey, would you like me to become your advisor? Would you like to move the money? Would you like to keep going through this process and we'll get this money moved and I can start helping you out? Sure. Why are they saying sure? Why would they say yes? Yeah, they do absolutely think I'm a salesman. Why will they say yes in that situation when they're looking at it? Because do they like hassle? Do they like confrontation? No. So they'll tell me yes, just to get out of the office. That's right. Just to leave, to get out of it. They don't want an argument. They don't want hard pressure. So they say, sure, yeah, whatever. And then at 10 at night, 11 at night, or midnight, they call you and leave a message because they don't want to talk to you. Leave a message in your machine saying what? We've what? Changed our mind. See, yes does not mean yes. Do I like that when clients say yes? See, this is the total opposite of what all salespeople have been trained. Got to get them saying yes soon and often. No, I think yes is a good word or an evil word when I'm in this process? Good or bad? Do I ever want to hear a yes? No, because yes could mean I don't want to argue with you, so I'll just say yes just to get the heck out of here. It could mean I don't want to look like I'm stupid, so I'll say yes just to get out of here. It could mean I don't even understand what you're talking about, so I'll say yes just to get out of here. And yes could even mean yes, but how strong is a yes versus if you've got a teenage son, you say you are going to clean your room before I get home tonight. Do you understand me? Yes. Okay, that's one. He said yes. I say, now, what am I doing differently? What are you going to do before I get home tonight? Well, I'm going to clean my room. Because if you don't, what's going to happen? You're going to take my phone. Now, which one of those is stronger? Yes, or having him tell me what he's going to do and why he's going to do it? Yes is bad. They have to tell me.
Now, you're going to let the auto role play ask for this.
Is it okay if, would it be possible for us to just kind of take this home and look at it at home?
That's a good idea. That's a great idea. Now, is everybody on your block the same? We've been talking, it's kind of a theme today, right? Is everybody the same?
No,
Same age,
no,
assets,
no,
family situation?
no.
Everybody's a little bit what?
They're all different.
Yeah. So we want to make sure you get all the information. So we wanted to move forward today, or we want to give you time to let the dust settle, give you good time to come up with questions?
No, we want to give time to come up with questions.
Right. And so we do want to get all of your questions answered. And would we like a win-win or a lose-lose situation?
Win-win.
Duh, right?
Right.
Lose-lose doesn't sound very good. So now, whose name is here?
Mine.
Well, yours is up here, yep. And whose name is down here?
Oh, yours.
Yeah.
Yours.
So one of our names or both of our names?
It's got both of our
Yeah.
names.
So all the things that we talked about today, many of them couldn't be done.
I'm not sure what happened there, but what I'm doing there is I'm going to have him tell me why. Let's see if it must have logged me out. Just a second here.
Lose.
No, we want to win-win.
And can I be honest with you? I mean, I've enjoyed working with you guys. I think you're fantastic. I love you, but guess who I love more?
Yourself?
Myself and my
Okay.
family. If you take this home and you do things the wrong way and my name's on it, guess who's going to get dragged into that?
You.
And will you be better off if you do some things the wrong way?
No.
And should I help you? If I've uncovered all these good things or bad things,
Bad things.
should I help you step by step walk through them, or should I just abandon the situation at this point?
No, you should help us.
Yeah. So why would I want to keep this here so we could do it one-on-one and do them together correctly versus having you take it home with the risk of you doing it the wrong way?
No, you want to make sure that it's done right, and you don't want to get in any trouble.
So why would it make sense to keep this here?
Make sure that none of that bad stuff happens.
Does that make
So who explained to me why they can't have the document? Did I tell him, hey, I'm not giving this to you move your money? Is that what I said? No. I had him walk through the logic of why and tell me why he should not bring that document home. Make sense? Coolio. So it's 10 to the hour. For the people who want to be in the script call, we will start just at the top of the hour at 10 o'clock. We've made it all the way through. And are we still in agreement that we'd like to circle back here, going through all 21-point checklists, script by script, starting from the very beginning, going forward again? Is everybody still on board with that? Can we get a Y or an N? Cool. So, so I just tack it on to the end. So we're only spending about 10, 15 minutes on it, but it's a good reminder. And we all remember things that we forgot. So perfect. Everybody's saying yes. Awesome. Super. Thanks very much for being on the call today. You guys have a fantastic weekend. We'll talk to you all next Monday. And I'll talk to people on the script call here in about 10 minutes. Thanks, everybody. Take care.